Today is Monday, July 29th, and I'm here with this week's update on what may impact the direction of mortgage interest rates. Last Friday, we received the Fed's favorite measure of inflation, personal consumption expenditures. It's showing the core PCE rose 0.2% from May to June. The annual reading held steady at 2.6%, remaining at the lowest year-over-year pace in 3 years and keeping September's expected rate cut from the Fed in play. So this is good news that we're seeing inflation actually starting to come into line. So we like that. Optimal Blue reports the 30-year fixed average 6.751% as of Friday, July 26, 2024. This is essentially the same pricing that I had last Friday. I mean, you can see that we're kind of staying in that range of around 6.7 for 30-year fixed. Now, do remember that these rates are a couple of days old, and so they are also based on an average. So the rate that you might receive may be different than this depending on what your credit score is, how much down payment you're doing, how many points you may be paying, or if you're not paying points, and of course, when you're locking in your rate. So this is based on an average from about 35% of the mortgage industry of what they use who use Optimal Blue for locking in mortgage rates. So if you'd like to have a rate based on your personal scenario, please reach out to me. I'm happy to prepare a quote for you. We have a lot going on this week with the Fed and jobs data. On Wednesday, the Fed will wrap up their two-day meeting, and it's widely expected that they're not going to make any changes to the Fed funds rate at this time, but that they will probably start to see adjustments coming in September at their next meeting. And on Wednesday, we have the ADP employment report, and on Friday, it's the BLS jobs report. Both of these tend to impact the direction of mortgage rates, especially the BLS report. So watch for changes to the unemployment rates and revisions to past reports with the BLS. It's anticipated that the ADP report will show 149,000 jobs added, and the BLS will add 175,000 new jobs. If we see unemployment tick up, that gives the Fed more reason to make some changes with the funds rate. As I prepare this report for you, just around 11:30 Seattle time on Monday, mortgage-backed securities are up about 4 basis points. Still pretty flat, but as you can see, we have a nice trend of green on the charts the last few days, and which means that mortgage rates have been improving. So hopefully this trend will continue, and I will let you know if we have any alert to locks or anything. Be sure to follow me on Twitter and on Facebook to get those alerts. We have a cash buyer program that allows you to buy a home as a cash buyer. NAF Cash buys the home, and then you buy the home back from NAF Cash using New American Funding for your mortgage. We now also have a NAF Cash advance program where you don't need to use financing to buy the home back through New American Funding, meaning that you have a home with a lot of equity and you want to buy this next home before you sell your current home. And so we can advance you the funds. So it's basically like a bridge loan without a mortgage requirement. You still need to qualify for the mortgage, and fees do apply. This is just a really brief overview for you of how this can work. But if you're looking at making a move and don't want to sell your house first, I can probably help you with that. If you're considering buying a home, remodeling, selling, refinancing, please reach out to me. Even if it's a year or so away, it's never too early to start planning and reviewing what your options are and to just even have a meeting to answer your questions. So I am happy to help you or anyone you know. I hope you have a great week, and I hope to talk to you soon. Take care. Bye-bye.